Hi everyone, welcome back to Be Rich. Yesterday we spoke about this whole idea. It's a thought experiment. It's not an investment advice about how we can invest in something we fundamentally believe to be safe because we are all new investors. We really do not know about macro trends and market trends, and we are new to investing and we are a dual income house. And let's say you're drawing a salary and you've been appreciating salary appreciation has been happening for you, and now you're in a position in life where you can invest quite a large chunk thanks to a dual income house. How you can look at a strategy of sticking to something like the Tatas and you can grow. So I thought we'll try the same experiment. Let's say you're a high net worth individual, or you're a kind of a person who can afford to invest 60,000-70,000 rupees a month because you're dual income and your situation is different, or you need to look at further afield for reasons. Maybe that your child will probably be going to study abroad, so you want to start looking at that as an option. So you want to invest in the American market and start accumulating some dollars. How would this have worked out if you've been doing? And if you're new to the American market and you do not know about the American market and you're worried and you only know global brands, what should you do? Well, that is the kind of mindset which I thought of for this video. So the company which I want to look at is Alphabet. Before explaining why I looked at Alphabet compared to other stocks, other companies, the FANG, which is, your Facebook, why I didn't look at Apple or Amazon, I'll give you my reasoning for Alphabet being closer to being like the Tatas than any of the other FANGs. And you may agree or disagree with me at the end, and you can put your comments down below based on the end of the video when I give you my explanation. Before that, let's do the experiment, deep dive into this part of this where we assume we do it with Alphabet and see what happens, right? So if you were looking at Alphabet for the last 5 years, I'm sure Rupesh should put the screen up of Alphabet Class A and Class B shares together. It really doesn't matter if you were looking at Class A or Class B. Okay, the one has voting rights, one doesn't have voting rights. It's the main difference between them. The price tracking of both are similar, so you can take either one for the sake of this experiment. And if you look at the last 5 years, Alphabet has appreciated by almost 185%, 187 to 185%. At the same time, if you look at the Indian rupee, because there's two advantages to this, the Indian rupee has also been depreciating. That means the dollars become more expensive and the rupee has been going down. So in 2019, the rupee was around 72, now we're at 84. So there has almost been another 20% appreciation there. So let's say you invested in 2019, just by the mere fact, let's say even if you left it as dollars in an account with no interest, you would have gained 20% by now. That is what we can understand from that. So we have to take both into consideration and calculation when we look at this. So I'm not saying that you would have invested, a chunk in 2019. That's not the point of this experiment. The point of this experiment is, let's say we keep it regularly investing on a monthly basis in the Alphabet stock. So you would have started investing at Alphabet when Alphabet was priced probably around $67 a stock, all the way up to today's price at $193 a stock. And the reason why I picked Alphabet also for the other reason is, if you look at the PE of Alphabet over the last 5 years, which I'm sure Rupesh should have put up this screenshot also. If you see the earnings of Alphabet, it has been growing steadily. The price has been going steadily, but the PE has been stable. So that means if the PE is stable, the price and the earnings are too staying on track. That means it's still at value. There have been times when it has dipped below its usual average, but the average seems to be around at near to 22, 23, 24. I would say probably around 23, 24 is the average. And right now it's ticking slightly above its average because of the news of the Willow chip, I assume, which has garnered a lot of interest, the quantum chip. So if you've been investing, right, in Alphabet like that, every month buying a stock from India, you've been transferring money and you've been buying it through various brokers. A lot of you have been asking me to do a video on how to invest in US from here. I'll sit with Rupesh and do a video with some screenshots and interactive called screenshots, and try to explain it to you how you can open the account sitting here in India, sitting at home, and you can start investing if it's something you're keen on doing. I don't want to get into that because that will become a very long video, and that's not the point of this video. So if you have been investing on a single Apple stock every month for the last 5 years, you would have accumulated 60 shares, you would have invested approximately around 6.2 lakhs, and your capital appreciation approximately would be around 3.6 lakhs, and your current value would be almost 10 lakhs. So this is what would have happened. You would have had 60 Apple stock and you would have had this appreciation. That means you're compounding, taking dollar appreciation into account and taking Google appreciation into account, you would have been compounding at around 18% annually. And I think that is a pretty phenomenal number to be at, and you're been accumulating all these shares in the US, in the American market, in terms of dollars. So, tomorrow you need to convert them for whatever reasons. They're already in dollars and you've been buying it since last 5 years. So you've been averaging out your cost also, because the rupee is getting cheaper or the dollar is getting more expensive, whichever you want to see it. So you also are saving there. So this is one way to look at it, the same way we did in the previous video when we were talking about Tatas. Now it comes to the question of why did you pick, of all companies, Alphabet, Vinod, and why are you saying they're similar like the Tatas? Well, there's a reason for that, because of the size and the depth of what Google is doing, right? Google is just not a search engine. They make a lot of money on search engine, but they're far more beyond search engine. They own YouTube, right? YouTube is a platform which we are right now currently on, which you're consuming and you're watching me, but it's more than Instagram, it is more than Facebook and WhatsApp, because the ecosystem of YouTube is very different. It is what is finally going to be slowly eating away at your so-called classical television, satellite television, and it is where more and more creators are present. And you have seen the controversies, which way ever you lean, when you see so-called influencers on YouTube, what they're doing. So it shows you the number of eyeballs landing here. Even Cristiano Ronaldo has started a YouTube channel because he can see the future of it. Then what do they have? YouTube is one. Next, they have Android. 70% of the world's smartphones run on Android. Simple as that. Apple is nowhere near that. You may agree on the money, the revenue, the whatever, but that's a massive ecosystem they're sitting on. What they do with it in the future and how they can leverage with it is immense. That's another reason. The third reason why I would look at Alphabet is because of Google Cloud, right? It's competing with Amazon, it's competing with Microsoft, but they're generating over $32 billion in Google Cloud, and it's growing, and they're aggressive, and it's going to get better and better now that they have their own quantum chip, Willow. What they can do in data harvesting and data management is going to be immense, and I would say it's going to be one of the biggest revenue in generators for Google going forward. Then, of course, they have Waymo, which is the leader in autonomous driving technology, and a lot of commercial vehicles are already rolling out in the US using Waymo. So these are what's already there, aside from the search engine. Then let's talk about their moonshot investments, which they have, which is many. They have things which are related to age-related, like Calico, right? So they're in medical field, they're growing and appreciating in that. And they have DeepMind, right, which is the AI breakthrough, which is to discover new drugs, like for Alzheimer's, they're working on. So that's one more thing which they're working on. And they're working on Verily, which is another healthcare innovation. So they're slowly pivoting. Not only they're leaders in information technology, not only they're going to be leaders in search engine and YouTube and all that, entertainment, they're also venturing into healthcare and medicine, which they see the future in. And with all this, there's a lot of scope for Google to grow in the years to follow. They seem to be, like the Tata, seeing where the future is. They're able to see where the world is moving towards, and they seem to be pivoting and heading towards that, which is great as an investor to see, especially when you're a long-term investor. So they already have competitive advantage in the market, and I don't think Google is going to go anywhere very fast. This can be said about Apple, this can be said about Microsoft, this can be said about Amazon, this can also be said about Facebook, and I don't know if you can say that about Netflix. But, it is out of these, if I had to pick if I had to put all my eggs in a basket, right now today I would probably consider Google. I wonder what your opinion is. What do you think about what I just said? Do you think it's controversial? Am I wrong? I support Apple products. I'm using iPhone, I use iPad, and I have complete Apple ecosystem, but I cannot deny what Google is. So I want your opinion on this. What do you think about what I said? And are you looking at feeling encouraged by what I said in terms of investing in American markets and where they are cheaper than Indian markets in certain stocks, in certain sectors? If you're looking at, would you look at that? Would you be interested in looking at American markets? Maybe I should do something of a study like this on Japanese, because a lot of you have been saying Japanese market has been very depressed for a very long time. Yes, the stocks are cheap, but they've been cheap for a long time. Would I really seen any appreciation if I discount the last 1 year where the world has suddenly been interested in Japanese markets? Let's say you discount the last 1 year and take the years before that. If I'd been investing in Japanese market, what would have been my appreciation? If I should do a video about that, about Japanese stocks and Japanese companies, mention in the comments. I'll take this up and I'll talk about a Japanese company like this, which conglomerate I would be looking at and considering, like Google here or the Tatas in Japan for the long term and the long haul. And we'll talk about that and see what happens. Thanks for watching the video. As always, do like and comment and share. And I'll see you in the next one soon. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.